Daily Rates Live with the Mortgage Calculator. Today we're going to be going through some live mortgage rates, and then we're going to be talking about self-employed borrower loans, some different loan options for self-employed borrowers. We'll wait just a couple of minutes here so we can go live on all of our different platforms. We appreciate everybody tuning in. Put the chat up on the screen there, so feel free to drop a comment there in the chat as you tune in. You can also drop any questions you have in the chat too when we go through our deep dive topic today when we talk about self-employed borrower loans. All right, thank you for the comments already coming in. Appreciate you tuning in nice and early. All right. It looks like we are good to go, so we will go ahead and get started. We're going to take the chat off the screen, but keep dropping comments there in the chat and drop any questions you have as well, and we'll get into those at the end. Hello, welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates for some different programs. And then we do a deep dive into a different loan type each day. Today's loan types are going to be self-employed borrower loans. So here at the Mortgage Calculator, since we specialize in non-QM loans, we essentially specialize in self-employed borrower loans as well. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into self-employed borrower loans for us. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through the live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool. Let's see what the rates are looking like this morning. Hopefully we got some good news with the news that's been coming out. Let's see what it's looking like.
Don't know if the new rates have taken that into account yet, but we will see here. Let me change my screen and we will check it out. So this is our pricing tool for our team of professionals. This will show us the general rates and APR. For today, it is November 14th, just after 11 a.m. Eastern. So all the programs have initial rates. As Kyle mentioned, there is some news going down, some inflation reports that are affecting the market. So I imagine we will have some new pricing later today as well. But this will show us the general APR. If you'd like a full breakdown of all the itemized fees, please get with one of our team members. We have over 400 licensed loan officers that can send a full loan estimate with the breakdown. For today's demo, though, we will set up a basic scenario to compare across the programs. We'll set the loan amount to $400,000. We will set the LTV to 80% loan, 20% down payment. And we're going to look for the absolute lowest rate we can offer for our conforming conventional programs first. Then we'll check out our FHA options. Then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional options, including the topic for today, most of our self-employed borrower options. We also have VA and USDA. We did those yesterday on the show, a couple examples there. But if you are an eligible vet or active service member, just let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do have any looking there, just let us know and we can quote that up. We'll start today with conforming conventional. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, let's see what the market is looking like this morning. And hopefully we see some more downward momentum later today. And as expected, definitely it's gone down about a quarter point already this morning. Best option 6.875 for 2.25 discount points and costs. Puts our final APR at 7.083. Yesterday we were at 7.2 something. So definitely some downward momentum, which is awesome. Now, if for any reason our customer doesn't qualify for one of these conventional programs, typically the next option we want to look at, using the same exact scenario, is an FHA program. So FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio. However, for the example, we'll keep everything identical. All we've changed is the loan type so that we can compare apples to apples and compare the APR across the programs. So let's see the FHA options this morning. And as expected, some good downward momentum, which is awesome. Best option today, 6.125 rate for 2 discount points and costs, puts the final APR 6.751. So as usual, FHA, for our customer that qualifies for both conventional and FHA, in this example, FHA is actually a little bit cheaper. So definitely recommend our MLOs and customers that qualify conventional still look at FHA. It's viable. Our customers that must use FHA, some welcome changes there to the MI. Remember, this APR does include the upfront and yearly mortgage insurance for FHA. So definitely some cool options, and we love to see the rates go down. Now, if our customer, for any reason, doesn't qualify for conventional or FHA, many other banks or lenders will have to deny that customer, but that's where we specialize here with our non-QM programs, also known as expanded guidelines. So for the final demo here, we will set up the same scenario, except now we can change the income. So non-QM allows us to edit the income. So full doc is what we use for conventional and FHA. That's 2 years of tax returns. If our customer is not qualifying with 2 years of tax returns, we would probably need to use one of these other options. We have episodes on pretty much all these options here: asset-related options, business bank statement options. The investor dscr options are just for investment properties. Personal bank statement option is the one we use for the demo always. That's the most popular. And we have RSU, stated income, VOE, 1099, P&L, no income, CDFI, a bunch of different options here. Personal bank statement 12-month is the most popular program for our self-employed borrowers, which again is the topic for today. There are other options, but this is typically the most popular. So let's check out the non-QM rates this morning. All right, so best option here, 7.5 rate, 2.875 discount points and costs, and the final APR at 7.629. So you see here, non-QM is about the same as it was yesterday. It does not react as violently or quickly as the conventional and FHA markets. So we should see some downward momentum in the non-QM, hopefully later today and tomorrow. But this is a good option for our borrowers that must use bank statements. It's still within about a half a point of conventional here. And I imagine tomorrow it'll be a little bit closer there, more like we have been recently. Now, if we scroll down, there's dozens of different options here using the bank statement options. Please get with our team members to find the best one for you. Some of these may allow bankruptcies and foreclosures and other credit issues, and some may allow us to use alternative income calculations. And before we go into Jose's examples on all those different options, we always want to pull up an investment example. So we'll do some live rates for investment properties, comparing our lowest rate options for our 2 programs here, conforming conventional and expanded guidelines, also known as non-QM. Remember, FHA, VA, USDA, all the government programs do not work for investments. So we'll start with conforming here. Everything else is going to stay exactly the same. All we've changed is the occupancy. So let's see what the conventional rates are this morning. All right, so where'd our portfolio one go? Boom. Portfolio is pushed all the way down to, looks like 8th place today. Again, keep an eyeball on portfolio. Remember, yesterday it was actually at the top of the list again. The portfolio doesn't change. Remember, it doesn't react as quickly as these other ones. The conventional programs are cheaper today. 7.499 rate, 3.125 discount points and costs. Final APR here, 7.737. And remember, keep an eyeball on the portfolio options. This one is exactly the same as it was yesterday. Remember, it doesn't react as quickly here. So this option was better yesterday, but you see with the recent changes in the rates, conventional is actually cheaper today. But tomorrow this will probably be a little bit lower as well. So always keep an eyeball on these portfolio options, which use the same underwriting. And for the final example, we want to do an investment property to find the lowest rates using our non-QM options, also known as expanded guidelines here. So when we select expanded guidelines for an investment property, we have a couple different options pop up. First, we must choose the income. The most popular is dscr. Because it doesn't require any income or employment info or documentation from our borrower, we simply use the estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage we're proposing here, aka the property cash flows monthly, that's a ratio of 1.0 or higher. We have options for under 1.0 where the property may not quite cash flow. For the demo, we always put 1.5, which is the highest value, so we can see all the options. And finally, a prepayment penalty must be selected. 3 years is standard. That's what we will use. We can select 0 if we want. That will limit what shows up and cost more. We could also select 5 years if we want. That will again limit what shows up, but does save our borrower some money. 3 years is the most common. That's what we'll use for the demo here. So let's check the DSCR rates this morning. All right, they're about the same as it was yesterday. Hopefully we see some more downward momentum in non-QM later today and tomorrow. But these are amazing rates for DSCR. 7.875 for 3.25 discount points and costs, puts the final APR at 8.017. That was beating conventional yesterday. Today, conventional is beating it by a touch there. So definitely some good options. I would say 100% of investors would still choose a DSCR when we're within 0.2 here of conventional. And most investors would even choose a DSCR for the flexibility, even when it is a much higher cost. So tons of flexibility here with these programs. Some of these options here at a little bit higher rates and costs may allow bankruptcies, foreclosures, other credit issues, may allow short-term rental income to be used for DSCR, all kinds of different options. So please get with our team. There's hundreds of different variations here. And finally, let's get into the topic for today, which is our self-employed borrowers. So you guys always see that option there on the live quotes for the self-employed options. Those are required for many of the non-QM programs, are specifically designed for self-employed borrowers. Of course, our self-employed borrowers can still qualify conventional and any other programs, but typically we have these specific non-QM programs. So I'm sure Jose has a couple cool examples up his sleeves here. But in general, these are specifically for self-employed, not necessarily meaning that we don't have options for non-self-employed, but these are specific programs for that. So if you're ready, Jose, let's go ahead and take it away.
Good morning, everybody. Thank you for joining us today for Daily Rates Live with the Mortgage Calculator. So first, I wanted to state that self-employed borrowers do not necessarily have to go with alternative doc programs, right? That's what we offer all the alternative doc programs because not everybody can qualify full doc, right? So. But first and foremost, like tonight's training that we're having for our borrower, self-employed borrower income analysis, or just in general borrower income analysis, where we obviously go through first reviewing self-employed borrowers, looking at their tax returns, if that's what they're providing, and then seeing if we can resolve it with tax returns. And then if we cannot resolve it with tax returns, then we go to our next option, then which would be bank statements, which is usually going to give us the best of both worlds, the most flexibility for doing what we need to do. And then if bank statements don't work out, we do have 1099 options for our self-employed borrowers that we love to use those options with our real estate agents and other borrowers that get 1099. So 1099s, the benefit of a 1099 is that you will be able to go to a higher profit margin because typically the expense ratio on the 1099s is 10%. So if your borrower is getting a 1099, do definitely consider 1099 over bank statements due to you can go as high as 90% on the profit on the deal. So what I am going to share then to you is I'm going to go through the whole spectrum here. I do have some primary examples and some investment examples that I've shared for you with the different income streams. Now we are assuming here that we did go first try to qualify the borrower for the lowest cost option, which is usually going to be full doc with tax returns. And then, should the borrower not qualify because we diligently reviewed the income documentation that they provided and there's no way that it could happen, or worse, the borrower told us, I haven't filed a tax return in 4 years. So then, we're not going to go tax returns on those options. So we do always want to qualify the borrower first, full doc with tax returns, if that is an option. So don't think just because we offer all of these cool products that we don't try to always go for the lowest cost option for the borrower, which we do. So let me share these options with you now. First option here is for a primary 1 unit purchase using bank statements. Now, do keep in mind 90% is the maximum LTV for this product. So rates are going to be a little bit higher at 90 than they would at 85 or 80. But always want to show our maximum LTV option. So 10.75%, excuse me, is our lowest cost option. And we can buy that down to 9.75%. Now we have our 2 to 4 unit primary bank statement purchase. Again, 90% LTV here. And this particular example, I priced it up for a 4 unit, just in case there's any difference between the 2, 3, or 4. And you will see that it is the same cost for the 4 unit as it is for the 1 unit. So we can say it's safe to say the 1 to 4 unit pricing at this particular option that we have is the same, which is incredible for a bank statement. Now we have some investment purchases. Now here we have an investment purchase, 2 to 4 unit. And I ran this one as a 4 unit. Maximum LTV for the investment 4 unit is 80%. And we do have some very good rates here since we are at an 80%. We're having 9.375 is your lowest cost option. And you can buy that down all the way to 8.25%. And our investment 1 unit. Now I chose 80% here. It rates a little better, but we are able to go to 85% on this one. This 80%, you will see 9.125 is at par. 7.99% is the lowest rate option. And again, this is investment 1 unit at 80% LTV. And now using a P&L program for our investment 1 unit purchase, you will note that at this particular option, going P&L or bank statements, same cost. So 9.125 is our lowest cost option. We can buy that down to 7.99. And our last example here is 1099 investment 1 unit purchase. So you will note 1099 a little bit higher in cost than the bank statement option. And I would probably say that has to do with the fact that the 1099 goes to a higher profit. And in the bank statement program, you're actually seeing the deposits going into the account. But still, you have 9.25 lowest cost option, and you can buy that down to 7.99%. Now, the only other option that would be available here that I haven't shown would just be a DSCR option, and that would be for an investment property only, because that one does not use any personal income of the borrower. So we could use a DSCR loan, or we could actually use a CDFI, which is a no-income loan for primary or second homes only, maximum 80% LTV on the CDFI loan. But again, that's primary, second home, but that's a perfect loan program for a self-employed borrower that cannot document income using traditional methods, cannot document using bank statements, cannot document using P&L or 1099s. The CDFI for primary and second homes will allow you to go up to a maximum 80% LTV.
All right. I don't see any questions, so let's go ahead and wrap it up then. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic like we did today with the self-employed borrowers. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily
We
Rates
got
Live.
we got a last minute question.
All right. The question is, do you know what the minimum FICO is for CDFI?
I believe I would have to look that one up right now. We did do that training about a month and a half ago, but those changed. But 740 is the minimum at which you can do because there is issues with LTV and reserves on CDFI. So I would believe that you're probably looking at about a 660, 680, somewhere around there, but that's not going to give you 80% LTV. Keep that in mind. CDFI just recently had some tightening of the guidelines, and they increased the reserve requirements on those, right? So they increased the reserve requirements, and they also decreased the LTVs on those. So you can go and you can price those. If you're one of our team members, you can price those out.
All right. Thank you for tuning in. We'll see you tomorrow, 11 a.m. Eastern. Have a great day.
Thanks, everybody.